Listed property on the JSE has done well to date. The rising trend in prices was disrupted when the US Federal Reserve announced it would start reducing monetary stimulus. As a result, money flowed out of South African listed property companies. However, this did not deter new listings from taking place. And the reason is very simple, say analysts. Buying physical property and extracting rent from it is cumbersome and expensive. Buying and selling listed property shares is cheaper and easier.
Over the last 3 years, you've had a lot of listed property companies come to market. There's been in excess of 10 new listings, and that's been as a function of the fact that the actual listed property stock is trading at a premium to the physical property. So if I own a physical property, it actually pays me to look to list that property in a company because the actual stock price would be ahead of the underlying net asset value of the company.
Listing allows the companies concerned to attract further investment, and they share the rental income they make with retail investors.
A listed property obviously pays a distribution, and that distribution at the moment for the sector is around a yield of 7.5%. But bear in mind that this yield typically grows as well. So there are contractual leases in place with the underlying tenants, so you can expect that yield to grow by inflation or ahead of inflation.
However, right now the growth rate of the local economy poses some risk.
What we're seeing right now is the economy is stagnating a little bit. There is a little bit of supply, especially in the office sector, excess supply. And if that supply is not going to be taken up by businesses growing, then that's going to put pressure on vacancy rates in listed property.
To date, the payouts to investors have outpaced inflation. However, if the economic growth rate continues to slow down, landlords may be forced to reduce rents, and thus the payouts will also have to drop.
The factors driving yield is obviously vacancy levels, which is supply and demand. It's rental reversions, the ability of property companies to increase rentals after the lease is expired, as well as rental escalations. Now, rental escalations are normally in the South African listed property sector run at about 8-9%, and it's normally higher than inflation. So your big risks there are reversions and the ability to rent expiring space. And if the economy is still under pressure in the foreseeable future, in the next 3 to 5 years, landlords will have no option but to revert negatively, which is going to ultimately give rise to pressure in the underlying distributions.
Meanwhile, though, analysts say there is still room for more property to be listed on the JSE. In South Africa, most commercial property is still privately owned and not listed. Other major financial markets have more listed property than privately owned property. Kunta Deutsch, SABC News.